Welcome back. Now, local benchmark bond yields eased to their lowest level since February 2021. This after S&P Global upgraded the nation's credit rating for the first time since 2005. At the same time, markets are pricing in a possible 25 basis point cut by the South African Reserve Bank on Thursday, following an optimistic medium-term budget review and Treasury's backing of the new 3% inflation target. Albert Botha, head of fixed income at Ashburton, joins us now for a look into the bond market. Albert, thanks so much for your time this evening. As mentioned, their bond yields at record lows, and I have to ask, how much further can this rally realistically go?
Good afternoon, and thanks for having me. I think it's important. You mentioned that the bond yields are at some of the lowest levels we've seen in years, and that is true. We also have to add that if you compare South African bond yields to where they are to other global bond yields, like for example the American bond yield and other measures, it's at some of the lowest levels that we've seen in a very, very long time. And if you have to look back a very far way before you get to levels that are meaningfully lower than we are at the moment. It is quite tough to see us moving much further than we are now. Yeah. But to be frank, we have been surprised to the downside on these bond yields almost consistently since April. And the lower the bond yields get, the better the funding situation for South Africa.
And who's driving the buying right now? Are we still seeing some appetite coming through from foreign investors, or is it mainly institutional local investors?
So it's a bit of both. So foreign investors are buying emerging market bonds in general, not just South African bonds. They're buying emerging market bonds all around the world. So we're seeing buying in those areas. We're also seeing some local investors buying. For a couple of technical reasons. For example, the All Bond Index has extended its duration, so they had to buy more bonds there. There's a massive maturity in bonds coming towards the end of the year, so they'll be forced to do some buying then. And then also now with lower issuance rates, it might also be a further spur to buy some bonds in the South African market there. So there's a couple of factors on the technical and the bond buying side, locally and internationally, that has helped our markets.
So on the technical side, things seem to be on the upside, as well as when you're looking at the macro picture fundamentally, where we saw that optimistic mini budget as well as the the S&P credit upgrade. How is the market positioning itself ahead of the SARB's interest rate announcement on Thursday?
So by far the biggest local piece of news in the bond market, as far as what you've mentioned already, which is the effectively the lower inflation rate target that has now been affirmed from effectively 4.5% to now 3%. With us and with inflation expectations dropping, and with the situation we find ourselves in, the very strong rand, for example, there is effectively a cut being priced in for the next meeting. So the market is positioning itself for further cuts. And then after that, into next year, we will, to some extent, go back to a situation where we will look at local factors as well as some international factors, specifically what happens in the US with the US Federal Reserve, and if they continue to cut rates.
All right. And before we let you go, just take us through today's bond auction. What in particular stood out for you?
So I think that, as I say, the biggest change in the bond auctions is lower issuance rates, right? So, and that is going to help bonds going forward. What has actually been dominating the markets a little bit today is a bit of a global risk-off measure. You would have seen, for example, that the rand sold off today. And I want to reiterate that it's primarily on global factors. It's not a result of local factors. I think it's one of the things that local investors and local people quite often get incorrect is when they look at things like, for example, the rand, or they look at the bonds selling off like they did a little bit this morning, that it's happening because of something that happened in South Africa. And about 6 to 8 times out of 10, it's mostly because of what's happening globally. And I think today was more of a global risk-off move than it was a result of local risk-off moves.
And it's always important to note those global developments and how they also filter through to our local assets. I mean, I was going through the JSE board, and it really is a bloodbath. But I think we can find comfort in the fact that we are not alone. Everyone else is feeling the pain. Albert, unfortunately, we have to leave it there. Thank you so much for your time and sharing your insights with us. That was Albert Botha, Head of Fixed Income at Ashburton.